Absolutely huge news in the stock markets today. Today is Wednesday, April the 9th, and there has been a huge amount going on today. If you watch the stock markets at all, you would know. I mean, we saw the S&P 500 jump 10% in a day. It's the biggest jump in 10 years. It is arguably one of the biggest moments since COVID. And if you exclude a couple of those COVID moments, it's one of the biggest days in the stock market in a long time. With all that being said, I want to talk to you today about what does this actually mean for your portfolio? What should you care about? And as a long-term investor, what does this mean? Welcome to Golden Arch Investing. My name is Liam. On this channel, we love to talk about Canadian investing. If that interests you at all, please do subscribe to the channel. It makes a huge difference and it doesn't cost anything. Now, today's video is going to be focused on the general stock markets. It is not exclusive to Canada, but there are some elements of this story that are going to be a little bit Canadian specific. So first, if somehow you avoided the news today, the United States is going to back down on their tariffs against basically everybody but China. They're pulling back on their tariffs on just about the whole world. They're focusing in on China. They're up to 125% as of recording, and they're taking everybody down to that 10% minimum tariff level. Now, I want to point out that is 10% more than it was 2 weeks ago for most of the world, but it's seriously better than it was this morning. And because of that, we saw the markets jump massively. Got some numbers here. If you look at Canadian markets, we were up maybe 5%. If you look at a lot of the sort of interesting US markets, we saw 10+%. You look at some American stocks, I mean, like big names like Palantir were up 20% today. But really, this is a short-term problem because now we have this 90-day uncertainty period. And as a Canadian investor, you probably have a flashback here because we have consistently had these, 30-day breaks in our sort of tariff fight with the United States as we sort of go back and forth about what's going on. Well, rest of the world, welcome to what we've been living. There is a huge amount of uncertainty in the markets, even with a lot of these tariffs gone. And there's a real question. Will the recession still happen? Just a couple of days ago, we had firms like JP Morgan giving a 60+% chance that the United States would drag the rest of the world kicking and screaming into a major recession. With a lot of banks coming online, agreeing with them recently, there was some real pressure for the US to change their course. And now that they have, the question is, will it have a real impact? Today, I'm going to unpack that, and I'm going to talk about a couple of specific sectors that Canadian investors should really care about. One of the main elements I want to talk about today is the fact that while these big moves are huge and probably game changers for a lot of different countries, a lot of different companies around the world, it's not necessarily that huge a game changer for Canada. Canada had largely avoided the reciprocal tariffs announced on April 2nd, and instead we were dealing with sector-specific tariffs, which in all fairness is a lot more normal. We had problems with autos, with steel and aluminum, with lumber, and we still have those. That's not backing down. Those aren't changing. Now, for my personal portfolio, these three elements aren't necessarily going to hit me too hard. The only real mining exposure I have is a small amount of Agnico Eagle that's in my private portfolio. I don't own any of it in the large fund in my public portfolio, and really all of my resources are in the energy space. Now, the thing that will affect all of my stocks is recession. And so you might be asking yourself, okay, with the markets jumping today, can I be back on the gravy train? Are we back, to use a Rob Ford reference for all those of you who lived in Ontario in the 2010s, back on the gravy train? Are we going, up? Are things getting better? So going to be more building? Are we going to have more construction? Are we going to, see oil go back up? Are we going to see, all of these stocks reach as highs? I wouldn't be so quick because I think the real problem here is uncertainty. I think the real thing that's going to probably push the US into recession would be continued uncertainty around spending. Now, the major tariffs on April 2nd are the largest example of this, but we've seen the stock market slip throughout basically the entirety of this administration. Every time we mention tariffs, every time it's on the news, people are making different investment decisions, and not just investors in the public markets. We're also seeing major companies not doing things because there are going to be tariffs. We're seeing people not spending money because they are worried about recession. And we're seeing people spending huge amounts to try and front run these issues in a situation where that might have ended up being not worth it. We don't know what's going to happen, and uncertainty breeds recessions. Fear is seriously bad for the markets, and so I don't think we're out of the woods yet. Well, I wouldn't call this a dead cat bounce. I would say this is just the market trying desperately to make something positive happen. I would say that at the very least, the reaction to it seems overblown. It seems to me that people are a little too excited and that they're taking this as a signal that things are going to totally change. Again, as a Canadian investor, we have seen the same story play out. We have seen 30-day breaks only for the same story to happen 30 days down the line. Now, why am I talking about this on this channel where we deal with long-term investing? Well, there's two big elements. One, we've talked a lot about the price of oil, and one of the things that did not jump quite as much today as the S&P is the oil price. I have it actually right here in front of me. Crude oil is up to, WTI crude is up to 63.10 US dollars as of recording, which is definitely not a massive leap from where it was just yesterday. It is a few dollars, and obviously with a huge amount of volatility sort of baked into the price, it should be expected to swing a couple dollars each way, but we're not seeing it up at 70, right? There is definitely still some worry in that space about recession. Otherwise, WTI would be back up. Now, you could argue that this is because of the OPEC plus move. I can definitely see that argument. You could argue that this is because of other subsequent potential tariff moves, damage to other economies, but I think probably the bigger story is going to be the fear of US recession. I think that is the thing that typically has the biggest impact on WTI. I think it's holding the price down. Do I think the stock market's going to rebound? Maybe. But I still recommend dollar cost averaging. I have been buying into shares over the last couple of days, and I'm very glad I did because the prices I got were great. But just because you saw a bounce today does not mean you missed your opportunity. We do not know what's going to happen in the next little while. I think it's still a really good opportunity to be buying shares, and that's what I would be doing in basically anybody's position. If you're buying into the S&P 500, that's a good move. If you're buying into a broad market ETF, right, like a Vanguard all equity ETF, right, that could also be a good move. If you're buying into sector specific or even into specific stocks, just make sure you know how they might fare if the recession happens anyways. And with all that being said, that's what happened today. That's my take. That's how I understand what's going on. I still think we're probably looking at recession unless we see concrete evidence that these problems do not just happen again. I think if you look at the model that's happened up here in Canada with these 30-day breaks with tariffs, I think you can expect a somewhat similar move down in the States where there's still uncertainty, where things maybe don't get super bad, but you're going to have this sort of yin yang, will they, won't they, of tariffs for the next little while. And that's going to really stop big business from making investments into things that are speculative. It'll stop people from being able to spend money the way they might want to. And that will just cause the economy to slow a little bit. And that's typically all it takes at times like this for us to see GDP start dipping, technically in a recession. That's my take. Hope you enjoyed it, and I'll see you in the next one.